Welcome back, players, traders, and haters. It's your boy D. This is D's Daily DD. Not a financial advisor, still not a financial advisor. This is not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only. Some of the stuff is speculation, right, from my research, but I definitely do the research and the DD for all of y'all to come back and get some value, right? My goal is to always bring some kind of value to the videos for people to learn, for my subscribers especially to learn. And while we wait for the MOAS, why not learn and educate ourselves? Because again, I think the biggest mistake the short sellers and the whole Wall Street and everybody who's involved in this stock market, since they let us come in, I think that is their biggest mistake, that they let us learn and advance our knowledge, and that's how we're going to advance our wealth, in my opinion. Okay, because knowledge is power, knowledge is wealth. I'm sure you've heard that before, and I truly believe in that. Yeah, so welcome back, apes, family. I know it was a good weekend. Hopefully you got some plans in, and got to spend some time with your friends and family, and got to fuck around for a bit and got to de-stress for a bit. I'm not really stressed though. Today, luckily, AMC was up about 5.3%. So I'm looking on my phone here, and then Ape was up about 3.6%. And it had a decent volume at 12.3 million volume as far as Ape, and then AMC had 47 million volume. So that's a bump up from volume. Usually, to me, that indicates, right, when the volume dries up, usually the volume comes back in, and then we start to see some crazy price action. And if you saw my videos last week, I was talking about how the threshold list worked, and what my opinion was on it. So I explained all that. But let's jump into some information I want to bring to y'all, because I definitely think there is still something wrong with the Ape shares, and this is what's going to be the value portion today. But yeah, when we look at AMC and Ape, and you look at the institutions, right? I showed this in my last video, how on Webull is saying 28% is owned by institutions on AMC, but only 4.74% is owned by Ape, or is owned institutions. The institutional ownership of Ape is only 5%. So that's kind of strange to me. It doesn't add up, because going back to the original dividend, it was supposed to be a 1-for-1. So where are all these, shares? And, what I want to bring up today is going to have to do with ETFs. I'm going to give you some information on ETFs. So this is kind of going to be like a ETF 101. And what is an ETF? Let's go find out. I always go to my favorite source, which is Investopedia. And let's learn off this. An exchange traded fund is a type of pooled investment security that operates much like a mutual fund. Typically, an ETF will track a particular index, sector, commodity, or other assets. But unlike mutual funds, ETFs can be purchased or sold on a stock exchange the same way that a regular stock can. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETFs can be structured to track specific investment strategies. So that's the basic definition. An example would be, the S&P 500. That's an ETF which tracks the S&P 500 index and remains active and traded as an actively traded ETF today. So again, it's like a basket of securities. You kind of think of it that way, right? There's a folder, and you have shares of different companies in this folder, and then as an investor you can come in and buy that ETF, and you're buying a little piece of all those companies that are in that folder. That's how I can kind of explain it. ETF share prices fluctuate all day as the ETF is bought and sold. This is different from mutual funds, which can only be traded once a day after the market closes. And ETFs can contain all types of investments, including stocks, commodities, or bonds. Some offer U.S. holdings, while others offer international. ETFs offer low expense ratios, offer few broker commissions than buying the stocks individually. ETF, here's a straight up definition. An exchange traded fund is a type of pooled investment security that holds multiple underlying assets rather than one only. And it's called an exchange traded fund because it's traded on an exchange just like stocks are. There's a little bit more information, and they're a little more liquid compared to mutual funds if you're comparing it. So an ETF is a type of fund that holds multiple underlying stocks or assets, shares, rather than only one stock does, because there are multiple assets within an ETF that can be a popular choice for diversification. I'm sure you've heard that word before. And there's, you know, Crim Jamer, right? Ever, you know, you guys know who he is. I'm saying his name wrong on purpose, but he always has said that the apes are dumb, right? That we're idiots, that we don't know what we're doing because we only invest in one stock. And, you know, diversification. Hey, well, I'm gonna give you an example of diversification here. ETFs can thus contain many types of investments, including stocks, commodities, bonds, and a mixture of investment types. Kind of just more of a breakdown. Let's see. And the other thing is, you need to see here, an ETF is a marketable security, meaning that it has a share price that allows it to be easily bought and sold on exchanges throughout the day. So it can be traded just like a stock, and it can be sold short. All right. Now, when I saw that, that was very interesting to me. We're gonna go down. There's different types of ETFs. But the one we are looking at right now is going to be a stock ETF. And this is a comprise of is a basket of stocks that trade a single industry or sector. For example, a stock ETF might track automotive or foreign stocks. The aim is to provide diversification, exposure to single industry that the stocks include high performers, new entrants with potential growth. Unlike stock mutual funds, stock ETFs have way less fees and do not involve actual ownership of securities. But stock ETFs, right, you break down, you own a little piece of all the whatever is in there. Now, there's also the inverse ETF. Remember when we saw that pop up with Ape, that they were going to, you know, introduce an inverse ETF? That would be a whole nother video, but here's how an inverse ETF gains. It earns gains when the stock declines, right? Shorting is selling a stock, and we know that, and blah blah blah. So that would be a whole different video. I don't want to confuse you too much, but there's different types. But the one I'm going to be talking about today is a stock ETF. Now that we have that basic understanding, let's move on here. We already know what it is: an exchange traded fund. It tracks particular index sectors, commodity, or like, you know, one part in particular, etc. An example would be the S&P 500. And then when I stumbled upon this meme ETF, this is why I'm bringing you this. This is what sparked it. All right, there's something called a meme ETF right now that you can go and buy from your broker, right? From Robinhood, Webull, Fidelity. If they have it on there, it's MEME, and that's the folder. That's the name of the folder. All right, now I want to bring this to your attention. Trades on exchange just like stocks. You can buy meme if you wanted to, just like a stock, and it's popular for diversification. All right, this to me, I'm gonna break it down to you over here on these notes, but would be like the ultimate FU to the short sellers, because people like Crim Jamer always say we're just one stock, we're just one company. All right, ETFs can be sold short. All right, can be sold short. Keep that in mind. And here's some stats for the meme portfolio. So the price right now currently is about $7, around there, and the all-time high is around $16.49. The float, the total amount of shares that are in this ETF is 150,000 shares of different companies, not just of AMC. You go down, AMC shares in the ETF, it's holding 4,361 shares, which according to this website I'm gonna show you guys right now is 4.37%. The short interest on meme is 30,000 shares and 30,052 shares that have been sold short, that have been lent out. That's about 20% short interest, right? Because of the 150,000 shares. Now, follow me here real quick. Just an example of how shorts layer shorts, because they, you know, when we see, like, for example, like on Stonko Tracker, when the ETFs disappear and there's no more shares that they can short for, it disappears, right? It's off there. But when there's shares that come back available, then Stonko Tracker posts that there are shares available in those folders. But remember, we're fighting against, you know, these hedge funds that have years of experience, and we can't see all the transactions that they do. We don't have that information as far as retail. We have very limited information that we can see as far as retail investors. So you always have to remember that. To me, again, this would be the ultimate meme play. This would be the biggest FU to shorts and the market makers and the hedge funds, right? That's why, like, I'm thinking of like buying some of these, and I'm gonna tell you why. It's because if the market crash theory is true, that if the market crashes and all these stocks, the shorted stocks, are going to squeeze or have huge run-ups because they have to sell their other assets, the long assets, to cover their short positions. This is what would, in my opinion, be a good play because of what's in this folder. If the right, it would be the best hedge. This ETF would squeeze too because of the basket stocks that would squeeze. In this folder, you have things like AMC, GME, companies, BlackBerry, DraftKings, Affirm, and these are highly shorted stocks. All right, so I'm not giving you financial advice. I'm telling you that I most likely am going to start buying some of these shares that are in this ETF, because that's just less ammo for them, right? Imagine if the apes were to come in and scoop up all these ETF shares that are in the meme folder. That would be, hilarious. That'd be funny because it takes away ammo from the short sellers because they think that we don't understand that you can short a ETF. All right, so there's that basic information. Let's pull this up to this company, right? It's called ROUNDHILL. They're the ones who put up this ETF, and it's called Meme. And these are the top 5 holdings. Now, the only one I don't like is Robinhood. I don't like that it's in here because it's not really a meme stock. They just named it a meme stock as far as like the mainstream media and stuff like that, right? But AMC is in here. Let's just go over some things here. The meme ETF is the first ETF globally explicitly designed to track performance of meme stocks. 21.3% percentage of total equity volume in 2021, 12.2 million Wall Street Bets active users, and 14 million monthly active users as of June 22nd. So there's still a lot of people that are in Robinhood, and here's the proof as far as retail. So this is, designed to provide exposure to meme stocks by providing results that closely track the performance before fees and expenses, so on. It's based off meme stocks. That's why it's named that. This consists of 25 equally weighted U.S. listed equity securities that exhibit a combination of elevated social media activity and high short interest. We know that. The rise of retail investors. Over the past several years, retail trading volume has grown noticeably at commission-free trading has become readily available from brokerages such as Robinhood, according to Bloomberg Intelligence. Retail has accounted for 21.3% of total equity volume in 2021, more than doubling its market share since 2010 as far as retail investors that are in the market. And then it's talking about the different platforms. And let's look at this, right? So the ticker name is Meme. You have the primary exchange, the New York Stock Exchange. That's what it trades on. And it launched on December 8th, 2021. Has a total of 25 different companies in there. ETF options. This actually has an options chain, which I think is strange. And it does lend out the shares. So you have to remember, you have to keep that in mind. Those shares that are in that folder, they're lending them out to make money, right? So that's the layer on layer. Shares outstanding, the flow is 150,000 in this. That's the total amount of shares that are in this. Now let's go to view all. And these are all the companies that are in this ETF. And this is the weight that it has, right? The percentage. And as you can see, there's Snapchat, Rivian. I wish Hood wasn't in here. I mean, that's the only one I really don't like. But all these other ones, Nordstrom, Affirm, DraftKings, AMC, GME's in here too, Best Buy, BlackBerry. All right. So this to me would be the ultimate hedge in case the market crashes and shorts have to cover. Well, in my opinion, this ETF would definitely run up in price because it's based off the underlying assets. Now, this is what I'm telling you. There's definitely something wrong because even this, right? This is from MSN Money. You have AMC that is saying 28% of institutional ownership. And you can choose the institutions or the mutual funds, but it is updated because when you go here, Vanguard is still holding 47 million shares and BlackRock is only holding 18.5 million shares. That's the most current thing that I could find. All right, but remember the dividend was 1-for-1. All right, so remember they were supposed to be issued 1-for-1, and that's what I'm telling you. If MSN Money is saying 24% institutional ownership, how is it possible that they don't own Ape? Where did those shares go? Are they missing? Or, who knows? But this is very, very interesting. And retail 95% of the shares ownership is what that says. Let's go back. So that was those were my receipts. And of course, what do you expect? What do you think? There's a lot of FTDs. I'm not surprised. On June 28th, there was 12,000 FTDs, which equaled $86,000. And you see this big rise here in FTDs for this specific meme, ETF. So even this ETF, right, that is based off memes is highly shorted. It's at around 20% short interest. Just amazing, right? Incredible. And I was gonna show you guys here on Webull, but it doesn't want to load up the ETF weighting. So let's just talk about the AMC chart real quick. I'm on the 4-hour chart, and the RSI is at the top, so that's what I don't like, because normally, right, it starts to make a retracement. But we've had a couple good green days, and today was a psychological thing. We were able to cross $10, and when you see this gap, the next level I'm looking for would be this gap fill right here, which was when the split happened. But that's gonna be where I expect resistance. And if we can crack that $12, $13, $12.89, $13 range, 12.50 to 13 would be the top of it. If we could crack that, then I believe we would see a major run into that, because of this huge gap that's missing here. Usually, right, it likes to fill the gaps. So then we could go all the way up to 18 to fill the gap. That's what I'm looking for right now on AMC. I'm still holding, right? Looks like on the daily though, we're okay. We're looking at the RSI, it's at 50, still in the middle. You're getting this cross now here on the MACD, which is nice to see. And then I always keep the super trend on. And if we can crack this, right, we're going to get a buy signal, a green signal, that we're going to start making moves, because the sellers right here look like they're getting exhausted based off the super trend and based off the MACD. When you get this cross, that's a bullish sign. All right, so that's what I'm looking for on that. As far as APE, I can see that the $6 line, the $6 price is where we're seeing major resistance. So we need to crack the $6 range, as we are on this uptrend, and you keep getting higher highs and higher lows, and that is a bullish signal, a bullish indicator. All right, so as long as we stay on this, which we kind of are right on it, it could lose it. We're on this Fibonacci level as well, that it's bouncing and holding in order to start making more upside action, but it could reject and start moving back down this way. Let's move on over here. And I said, I think I'm about to buy me some meme ETF shares, right? There's 4,361 AMC shares in that folder that they are lending out to shorts. Not that it's a massive amount, but every share counts. Also, the float of meme is only 150,000 shares total. Let's go to, Stonko Tracker, 18% cost to borrow, about 650 according to this, but look, 0 ETF shares, and 28,000 calls currently in the money, with a lot of potential to run this week, with a lot of potential calls that could land in the money, and 49,000 puts that are currently in the money. And the last thing I want to point out is going to be Adam Aron's tweet that I found to be very interesting about Disney. So we go over here, this one right here. Disney and AMC do huge movie business together, and I have said for years that the consumer's ferocious quest for content allows both movie theaters and streamers to thrive. So I am thrilled that tens of millions of Disney Plus subscribers now get perks exclusively at AMC theaters. So in my opinion, right, this is bullish, this is good, this is him, I think, dropping little hints, because there's been other people that have said, what if AMC partners with Disney in order to create the credit cards and so on, and this could be an unstoppable team. Disney's a well-known figure as well as AMC is. And yeah, guys, I think that's all the information. Yep, I just wanted to pull all that up. And that's what I got for you guys in today's video. Hopefully you learned something and took some value. But I love all my subscribers. Thank you guys. We're going to continue to push to grow the channel. If you can, share the information with other apes, because like I said, I'm here for the subscribers. I enjoy doing this, and I'm going to keep doing it because I'm seeing progress in it. And thanks to y'all. Thank you very much, guys. I'll catch you in the next video. Peace out.